Yo, 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 yo. Into my headset off. I don't need to hear myself again. What is up, internet land and freaky tradey people? I'm your host, MADtrading, a voice for silent film and a face for radio, but switch it around as normal. Um, well, not done a video really for some time. Couple of reasons why. Won't go into them now. But this is going to be a quick one. I say quick. Whenever I do say quick, I can hear myself saying it. I know it's never quick, and I do ramble and rabbit. I know. I got it. Deal with it. This is mainly for those that are doing or that are looking at doing, currently maybe could be thinking of doing the daily engulfing strategy that we're demoing. And I'm not teaching people how to trade. I'm purely showing people how I do it. And this is not financial advice, blah, 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 blah. Make your own decisions, blah, blah, blah. Do your own back testing. Don't believe nobody, blah, blah, blah. So we're going to add a few things basically to the daily engulfing strategy. Currently, let me just open up the trading screen. In fact, no, before I do that, let me just pop on to Duberatum and tell people I'm live. Twitface. Have I got a link? Let me just get a link. If no one. Nope, don't know where it is. Never mind. Okay, fair enough. Anyway, live. Let me just copy that and paste it to other places. Yep. Okay. Right. So let me go on to the trading screen. So currently, the engulfing strategy, and this is on the web trader. This is for IG. I use a couple of brokers. IG are just one of them. I don't, I'm not affiliated with anybody. If you join IG on your own back, that's down to you. I get no money if you join IG. Even if you mention my name, they'll probably say, "Who? What? What? That idiot? No, thanks." So don't think I'm trying to sell IG to you. I'm not. They're just one of the brokers that I use. And weirdly, IG, this web trader, the online trading platform they've got, the prices on here are different to the prices that are quoted through IG again on Pro Real Time. And the next video or two, I'll go over the Pro Real Time stuff that I do use. But just search Pro Real Time. It's standard. And they differ quite a lot in that here, Monday the 4th of November 2019, which is a random day, that on here isn't an engulfing candle. Not in my eyes anyway, not for the strategy that I use. The body of this candle on the Monday did not engulf the body on the Sunday. Excuse me. And obviously, if you've been listening to, watching, talking to me about it, for me, my strategy, although this is technically an engulfing candle, if you go into the depths of engulfing candle technicals, for me, this is not an engulfing candle. For me, the body itself has to be equal to or higher than the body of the previous candle. And we don't trade Sundays anyway. So that was a weird day to try and pick. But anyway, but on Pro Real Time, that might show as engulfing the previous candle. So on Pro Real Time, it could be a engulfing candle, whereas on the web trader for IG, it's not. So we're going to stick to the IG web trader for now, and we're going to change a few things, or add a few things, should I say, to the strategy. And it's not because it doesn't work. It's not because it makes it, more difficult, because things aren't that difficult anyway. It's so that we can add on a few extra bits and bobs called confluences, and we know where we should be aiming for, or why we shouldn't be getting into a certain trade, or why we should be getting into a certain trade. Before I go, I've reset the demo spreadsheet. I'm just looking at it on the other screen. I can't remember what the outcome was of the demo for the past couple of months, but anyway, it was like 280 something quid up after a couple of months, which isn't bad. That's what's that, 12%, no, 14% increase overall for 2 months. And I haven't really traded on it for a while, if I'm honest. But just keep on doing the same thing. If you're demoing it, not on a live account, wait until you know all the statistics of the tradable assets. So in other words, let's pick one that we're not going to trade. Barrett Developments. I don't trade this. I look at this as a indicator of what's going on. For instance, way back in 2020, there was a big old, oh my God, we're all going to, oh yeah, no, we're not. So as an indicator, you can see when there's bottoms in the market. You can see when there's highs in the market. You can see when it's in a nice uptrend, a little bit of a downtrend, nice uptrend. Oh my God. Then a nice little climb back up. A little higher high. Oh my God, no, it's all gone to shit kind of stuff. We read about January this year. So I only use this for, not predictions, that's the wrong word, but I look at where the housing market in general, and therefore people, and therefore costs, are going. If the housing market is going down and there's no more housing being built, or the housing companies, the companies that build houses, aren't building more houses because of, they haven't got the manpower, there's not enough equipment, there's no money being given to them to build houses, they can't buy the land, all those things, then obviously their prices will go down, because they only make money as a company when they're building houses. Obvious. But let's take this one. So what was I getting on to? There's me waffling on. You don't really get many engulfing candles on this, but anyway, so currently, if it's below the 200 moving average and there is an engulfing candle, if there is, then you would place a fib. I'm trying to find one. That one, there you go, that will do. You would place a fib, the MAD fib, how I've explained to you beforehand what to do. And if you're going short, so if you're selling the market, we start at the top of the candle, we click at the bottom of the candle, and then we drag it up. You can see the fibs moving around a lot. Drag it away so the 0 mark is at the top of the candle right there. Now, if we had have traded that, we'd have been stopped at. Oh no, we wouldn't. We wouldn't have been in it. There you go. And I normally say for forex, indices and whatnot, gold, oil, gas, that if where our stop would have been placed, so if we'd have placed a stop at this 514, if our stop had been breached, then we take the trade off. Another reason why I don't trade certain shares this way is because this happens quite a lot on shares. But if we hadn't have stopped out, if our stop was up here at the minus 20 point on the fib, and we've spoken about that a few times in the past, you would place an order to enter here at the 498.74 with the stop somewhere, either at the 0 level or the minus 20, whatever you want, and then you'll take profit, or might take profit, at the 261, which is 1.61 on a fib. For me, 1.61 is, that's the ratio. That's how, you can get more money if you wait until you get to 400%, 300%, 500% even. But for me, the 161, or on the percentage wise, the 261 is a good return value. You get more than 1 to 1.5 return. It's 1 to 1.61, well enough. Which means after 2 consecutively good trades, you can lose a trade and you haven't lost any money. But now we're going to add a few bits and bobs on in a minute, and that'll increase not only your win rate, or the win rate, but also the return as well. So currently, an engulfing candle in the direction of the 200 moving average. So we're well below the 200 moving average on this one. When was that? May this year. Draw the fib. You would get in at the 100% mark to go south or short. Sell the market. Stop wherever you want your stop. And then it will play out. Now, that's all fine and dandy and great. And if you'd have waited, and and been a very patient person, you probably would have made, you know, a good 5, 10, 15 R return on that. Let me look at my measures. So if we, let's say we were good and we did it at the -2, sorry, -20%, that's 18.6 points. And if you did it a pound a point, excuse me, I'm getting all dry. I need some liquid gold. If you did that a pound a point, that's only £18.60 you'd have to lose. But you know, that's obviously daft. We want to try and lose. We want to risk, which is losing, I suppose, the same amount for the amount of money we have in the trading fund or the account. And for me, I've said, you know, it's a demo account, so stick to £100 risk for every single trade. So, me being the freaky lunatic that I am, I will need a calculator because, you know, I can't do math in my head. 100 divided by, let's go for 18, just make it really easy. It's 5.5. So that would be £5.5 per point risk. So, we've risked £100 there. And to get to 261, which is just here, you make 25.4 points. It says it right there. So 5.5, so 5.5 times, what was it? I've got already 25.4 is 139. So you've 140. So you've risked £100 and you've just made 140 quid back for virtually nothing. What's that? It's not even a week. So, you know, not easy money, you know, don't get me wrong, sometimes you will lose, there's always losers. If anyone tells you they're always winning, they've got a 100% winning rate, they are lying to you. Either that or I'm in the wrong circle of people who trade, because no one I know has a 100% winning rate. No one, not one person. We always have losing trades. Yes, you can have consistently profitable months, and if you know, if it's such a good strategy and you do it consistently, you can have consistently profitable weeks. But there are days when you lose money. There are times when you will lose trades. Anywho, tangent. If we'd left it to go to the 500% or 1 to 4, it's 62 points. Just do that, you know, your own maths. £5.5 times 62. But if you had, I don't know, gone off on a jolly to Jupiter, I'm talking about, yeah, one of my kids, my daughter, my eldest, she's into spacey things, which is great, love it. So bought her a VR headset and she's, you know, flying around space in this VR headset and she's learning all about the planets and whatnot. And she really wants to go to Jupiter. I don't know why she wants to go. Why not Mars? You know, why not somewhere where we can actually get, anyway, so she wants to go to Jupiter. So if you had have gone on a vacation, holiday, little summer getaway to Jupiter, and you came back in October and you thought, oh my god, this is the lowest point it's going to get to, it's just retraced up a bit, I'll give it another day, oh no, it's closed there. There's 155 points. So we've risked £100 at £5.5 a point. We've just come back from Jupiter and we've made 155 points. There's 852 quid for literally doing nothing. Giblets. And on spread betting, that's tax free. You won't actually get £852 back because you have overnight charges, you have swap fees, and they're pittance compared to, you know, a fee that you would pay a manager to look after a portfolio of stock, and they don't short stock. They just buy the share, and then when they think it's over, they'll sell it. They can't short it. They're not spread bettors like me. So if we had done that, if that was one of the things that we were looking at, on any instrument you want, that's how we're doing it currently. So let's add in something called a bit of technical analysis. Now we need to get off of Barrett. So random, let's go to, no, let's just randomize anything. Let's go here, let's go to AUD JPY. Have I even got that? No, good. Right, so AUD JPY, still on the daily. And again, you can do this on the 4 hourly. You can even drill down to the hourly if you want, but you would need to know the direction of the daily, 4 hourly, and then make a decision on the hourly. I'm neglecting to see if people are messaging me. Oh no, that's no, it's Mike. No, wrong one. Okay, I doubt anyone's watching this live anyway. So AUD JPY, and we're not going to do it this. We're not going to do it now. Let's go for way back in 2018. Remember, we're still not currently taking an engulfing candle if it's on a Monday. Excuse me. And we're going to start from here. So what you can see on the right hand side is what we should be able to see on the screen. IG don't allow us to do back testing through the web applet. We can on Pro Real Time, and if you have an account with TradingView, it's easier to do on TradingView. But I'm not going to go into TradingView. There's too much information to throw at people at the minute anyway. So if you are au fait with TradingView, if you've got a TradingView free account, stick it on TradingView and you'll be able to see, do your own back testing, do your own assessment, look at your own statistics, but use this information if you want. I'm not telling you have to, and you should get similar results to what I'm about to show you. So let's forget the fact that we've just been in this massive downtrend from when was that? September 17, and it's now here. So it's gone all the way down. It's crossed over. Uptrend, no, or downtrend, no, not a downtrend. Uptrend, oh no, downtrend. So currently, I think we were actually. No, yeah, right, let's go for that. Currently, it's a downtrend, but before we even look at any engulfing candles, we need to do something called some technical analysis. I'm not a guru, not on anything really, unless you want to talk about syphilis, but it's more an interest in technical analysis. I'm not the man to teach anybody or to show anybody about technical analysis. I just know it as I've YouTubed it and I've watched a few other people, and I did a couple of courses, or I was shown it whilst I was trying to learn so many years ago. But for me, the most important bit is you need to make a choice. And once you've made that choice, you need to stick to that choice, because if you change what I'm about to say on each time frame, on each instrument you want to trade, it will give you different results each time, and you won't be consistent. There won't be any consistency going. And that choice is, whenever you make a technical analysis a point. So, oh yeah, by the way, technical analysis is roughly, not the dictionary, trying to figure out where certain intersect points are. So a point where on the chart price will either come back to or bounce away from or head towards, and that's support and resistance zones or areas. And when you're thinking of or making up these drawing up these support and resistance zones, you need to think whether you're going to choose the wick, where my cursor is now at the very top, or the body. Now, my personal preference is the wick, and it's the top of the wick, but I don't aim for the top of the wick, I aim for the top of the body, and that might not make sense now, but it will make sense in a bit. So I'm just going to mark up some areas that were significant, and price came up to or went towards and then bounced away quite, urgently, or it didn't come back to that area for some time. And we're just looking for the daily support and resistance areas, or technical analysis, and not fundamentals. I don't do fundamentals. I don't care if I know Uruguay, for instance, if that is still even a country, is about to start using Bitcoin. I don't care whether America have said anyone who's got one leg only pays half tax. I'm not bothered what the fundamental side of the monetary policy is. I just care about the price. So technical analysis, I would stick a bar there, that top of that one there. Let me go for that one. There'd be one down the bottom here. There's a big one for me anyway, and this is where you'll get your own way of doing it. And whilst I'm looking at this, I'm looking left. I'm always looking left whenever I'm placing these. And as I can see, if I place that bar right there, it intersects with the top of, or these bars here on just on the left hand side in January 18. So on this occasion, I don't want to place it at the top of this bar because I won't interact with anything. I'm going to place it at the bottom of these bars. Sorry, wicks. Top of those wicks. Because it intersects with this bar, and it also, looking right, intersects with this bar. I'm not going to add one here because it's touched it once, twice on here, and then it kind of was maybe support or resistance. Sorry, no, support here, but it wasn't that close. But we look for zones, we're not looking for exact areas. And whilst it did nip past it here, it then also rejected, but it came back off of the 9 moving average, which is another aspect we'll add on probably in the new year now. So for me, that's about it. And we are in a downtrend right now. So let's look at an engulfing candle. When we find one, we're going to do some more analysis. So I'm looking off to the right. I can't do anything about this. There's one. What day is that? That is a Monday. We do not trade Monday engulfings, even if it does engulf the Sunday. We only trade a Monday engulfing if it includes, or if it engulfs the previous Friday. This being the Friday candle, a big old candle. That Monday candle did not engulf it. So I'm looking for a short opportunity, but it's also below this resistance level. So if we find one that touches this and then looks as though it's going to shoot off south, that would be even more confluence for us. Okay, so Monday, nope. Ooh, would have been a good one. Okay, so here's one. I think Wednesday, 10th of October. Let me zoom in. Did it? Would it? Should it? Let me go up a bit. No, it did not. Oh, look at that. Yep. It was not a fully engulfing candle. This is going to take ages by doing it, so let me just try and find one. Oh, we're above. We've gone above the 200 now. Nope, that's not one. Do I even trade the AUD? I'm not sure. So here is one, but we are above the 200 moving average. And we are in between these support and resistance areas. So it is logical that if it breaks down back below, on this one it's logical it was going to go up and touch the next one, but on this one it's logical it's going to go down and touch the one below. But we're not doing that strategy, so that's fine. Shout if you see one, and I've gone screaming past it. Okay, so 8th of January 2019. It might be a winner, it might be a loser, no idea. Let's have a look, see. We need a fib extension. And why am I on this one? Because it closed above the 200 moving average. So we go from the bottom of the candle the top of the candle, and we'll drag it out to the right this time, just because we can't go left. And I need to take it back to here, which is, oh, what is that? What's that? If I move, it's going to give it away. 55.72.8. 55.72.8. So, oh, you absolutely gimp face McGimpy. Bang, smack, sod it, bang, drag. Need to make that bigger. So it's definitely an engulfing candle. Now we do want to place an order on this. That would be, you know, standard. We're going to be going long, I would have hoped. But in order to know where our take profit should be, or our risk, stop loss should go, we look for these support and resistance areas that we've just drawn. And if it were me, where's my doobie? I keep thinking I'm on the wrong one. Let's go for measure tool, make it easier. So this would be my risk, and I'm going past the -20. I'm going down to the black 5556 support. So just down here. So this support line that I drew before, I'm using that as my risk, as my stop loss, and I'm going to be placing it rather than the 261, which would be, you know, a decent win. I'm going to stick it just before the next resistance line at the 300. So it's a little bit, you know, it's 40 or 39 points more, or 39% more. So let's just move this and see what happens. So we get definitely taken into the trade on this next candle, and we're riding the wave, and we get stopped. We don't even make it to the 200%, but that's fine. So that's a £100 loss, no biggie. Now we're below the 200s. We're going to keep on looking for engulfing candles. I bet that's on Monday, isn't it? Yeah, Monday. Yeah. Looking for shorts. Here's a short. Now that's a massive candle. It doesn't quite, see, this one wouldn't be a long because it doesn't quite close above the 200, and that's not quite an engulfing candle, so it's a pass from me. When we get to, here we go. So here on Monday, on a Sunday. So that's probably why I don't trade the AUD JPY. Let's just have a look, see. So on this one, if we had put our fib on that one, so there, crack out. Oh, excuse me. It would have definitely made the 261, but if we're going to put our stop loss at this area here, and all we can see is that now, we need to look to see, oh, is there any other area we can choose as a support or resistance area? And yes, there is. Quite obvious for me. These tweezer bottoms, the two double bottoms here. So I'm going to use the second to lowest, which is this green candle here. And oh, my phone's going. Let me just go silent for a second. Yeah, sorry about that. I've got to give a chap a call. So that would be where I would place my my support line, 53994, and it's also where I would go for my risk, but I wouldn't go to the wouldn't go all the way to here. I would go probably just below it. So let me get my measuring tool. So my risk is to this black line up here, so that's 48 points, and I would probably go not all the way down there. I want to go just a bit above it, and let's go for, there you go, it's a cool 100 points, and it makes it quite easily. So the bit that I'm going to suggest, if anyone is still looking at doing this daily engulfing on the fibs, and excuse me, I want to add or change, or I want to continue on adding and changing as we always do, I'd like you to add in some confluences, which is a fancy word for support and resistance. Now, it works all the time. Let me go to now. Remember, we drew these before. We drew these years ago, 2017, that was it. That definitely worked. And it's still on the daily. And if we had, see, obviously AUD JPY is, is okay, doing it on a Monday, so that's fine. But if we had a close above the 200 and a close above this support resistance line, we would have aimed for this one up here. So let's just do that. Last one before I shoot off and give him a call back. It's not even an engulfing, but let's say it is. Bottom to top, back down again, drag it out. So rather than getting or taking our profit at 261, we could quite comfortably have taken our profit up here somewhere. So we can't see that, but we know that there's a support or resistance line up here. Where's my? I've got loads of things going on in my head now. I've got to try and think about how to get back in touch with chap who's just called me. Anyway, so that's my risk. I'll probably put it down at -20 if I'm honest. So there's my risk, and that is 60 points. Pound a point, 60 quid. Obviously, £100 risk is what we really want to do. And rather than go all the way up to the top, which is where this black line is, I'd probably take it a little bit beforehand, 3/4 of the way between the 300% and the black line. So roughly here, it's 127 points. That's more than doubled. And as we already know, because it's in the chart, it takes it quite easily. So that's what I'd like anyone that's doing the daily engulfing demo, not live, demo bit with me. That's what I'd like to add in. Just for now, support and resistance. So horizontal support and resistance lines from however far back you want. It makes no difference. I mean, it's easier if you use the most recent, for example, up here. There's one up here, and there's one doobity here, and it intersects quite a lot through here. So let's go with here, and then you can use that as your profit targets or your stop losses. And so it's no longer fixed at 261. You can move your profit target to the closest fib line to your, the support or resistance line. Support being below, resistance being above, or vice versa if it's on the way down. And your stop loss is no longer fixed at 0 or -20. You can move your stop loss or have the stop loss at the closest support or resistance line, as long as it's not too far away. If it's like another 100 points away, then don't bother. That's going to bankrupt you. So add this to your assessments, to your charts. And you don't need to do it every day. I will do this once or twice a week or a month for certain things, and then I'll trade to and from or in between those areas. Only if there's an engulfing candle, not on AUD JPY. So it is going to be a quick one. Wow. I've got to shoot off. We're going to speak to a man about a few things, actually. But I've got to speak to a chap who has just been calling me. So I'm going to call it a day for now. When and if you have any questions, you know how to get in touch with me. WhatsApp, here on YouTube, on Discord, on what's the other one I've got going? Blah, blah, blah. What is that? Not Twitter. Telegram, that's the one. There's loads. Just get in touch with me, ask some questions, and I shall speak to you soon. Have yourselves a really good day.